Hi, welcome to the Market Alert for Thursday, the 13th of August 2020. So the S&P jumps above record highs after a 9 trillion global liquidity tsunami, i.e. central bank money printing, and lots more printing, finding its way into the stock market. Also, we're heading into the US election, and the US voters like to see the stock market on the highs. That they think Trump's doing a great job. And statistically, if the stock market isn't in a bear market and you're running for a second term, the odds of actually being selected for a second term, if the stock markets are on the highs, increase significantly. So this is what the Munchkin's been doing at the Treasury. All of the money printing from the COVID stimulus, which I've highlighted before, the missing 4 trillion that went to add liquidity to all of the central banks and the primary dealers, has made its way to the stock market. However, things not so good in the UK. Yesterday morning's GDP figures were released and they were dire. And as the headline says, virus crisis drives largest UK recession on record. And we can see here, as a result of the lockdown, the GDP for the quarter is minus 20%. The only issue I have here, having spoken about this way back in February, that we were heading into a recession a lot sooner than that's been revealed here, and is that the use of the word recession, it's misleading, because we are heading into a depression. That is for sure, given the measures that are still in place at the moment of restrictions, etc., and the local lockdowns. So yes, it's going to be interesting, and this is another reason, again, I'm saying depression is because, of course, we've got the furlough payment to end. The dining out joke ends as well in August. So it'll be interesting to see how these figures unfold and how the economy unfolds from the end of August all the way through to September. We go into the autumn, and then there's the potential for the second wave. I think minus 20% is maybe underestimated personally. And then once the US election is out of the way, then watch the wheels come off the whole of the global economy, especially if Trump gets back in. That's for sure. So the good news is that stock markets continue to move to the upside. So let's have a look at the German DAX for yesterday, which is not back at the all-time highs, but is making great strides in order to do this. We saw the market move higher after I'd actually recorded the market alert. Prices were below the 200 and the DP. Prices broke back above the 200 MA, and then you can see the buying there trying to get back through the DP was met by a bit of selling, and then eventually it breaks through, and the market moved up quite nicely there, some 80 points before the main cash market opened at 8 a.m. Which, given the backdrop of a minus 20% GDP, the market was incredibly quiet, but I suppose everybody knew this was coming, so it wasn't really much of a shock. So the market kicked off with a potential sell and managed to fill this, and we see prices trading down to the scalp, and that's where it ended for this trade. The market had already attempted to move higher, so it'd be no surprise to see if they could bring the market back, and that is precisely what they did in the next bar. They brought the market straight back and then put in a buying bar. As I've said in the market alert before, if you get profits in the first 2 or 3 bars, it's prudent to either get to break even or to take those profits because of the whipsaw nature of the opening part of the session. So the market moved back, and then it's interesting here because you've got higher volume in this bar than the previous buying bar that was bringing prices back, and then prices reverse once more. So I'm just going to fast forward through to the trades. You can see the selling there following the selling in the previous bar. Prices trade down towards the BRN, and then you get the shorts taking their profits, which you get to the green inside of the red. I'm having a look to see where the market is in the bigger picture. I always dip back in and out of the daily chart just so that I'm aware of where there's going to be really good profit targets, and also where there is resistance and support as well. So I'm just having a look there, and I can see the market's sitting on the BRN, and it's now starting to trade sideways, and No surprise really, I suppose, as it's the news has already been released, and the market still in the summer throes, which I thought we'd got through given Tuesday. Was it Tuesday? What day is it? It's Thursday. Yeah, Tuesday afternoon's move to the downside was nice in the market, so I thought the volatility returned. But yesterday we see it was fairly quiet, but we did get a buy signal with prices moving higher. And again, I'm looking at the daily chart to see where prices are. I'm in particular, obviously, looking at the 13,000 level. However, prices didn't even attempt to do this. We got through the 12.9550, and then prices came to a grinding halt, as you'll see there, the maximum 30 points on the trade. And then this bar here was a bit of a clue that things weren't going to move higher at this point, because prices had reversed, and the bar contained a higher volume as well, and closing back below the BRN there. So there's weakness at this area, so nothing wrong with taking the profits. Prices trying to move higher, but eventually they start to come back to the scalp. And then back to the 20 bar moving average through this, and this is an interesting bar here as well, because prices have come off the low and the volume has increased as well. So this is, if the prices are coming off the low of a price bar like this, there is some buying in the price bar. There has to be, otherwise prices wouldn't have come off the low. We then get an indication and confirmation of this as we get another buy signal, and then we get a sell signal. But notice now prices have become really quiet, and it's at this point you may think, well, actually it's not worth trading given that the backdrop of summer. But actually continuing through this was quite a surprise, because the lack of momentum actually worked out fine, that the sell signal wasn't filled, and prices then started to move again. But the lack of momentum, I mean, you can see from this price bar here that we've got absolutely no interest, and also the volume has dropped off as well. So there's nothing wrong with leaving the trading at this point and waiting to see if the market breaks out, and then getting into trades that are on that basis as well. Or you can just trade it out. As each signal appears, of course, you will just take them as part of probability trading. So price is now giving another potential sell, which again this time runs out of time, and prices manage just to barely get to the scalp level. And again, you can see the volume starting to drop off as well. So at this stage, there's nothing wrong with pulling the plug or waiting to see, but again, you can see there's just absolutely no momentum, and prices then come back and put in a potential sell, and prices move sideways to lower. They trade down to the scalp, they move lower, and then watch the volume in this price bar now. So here we have the shorts taking profits, just as we've had here, and when you see this, there's nothing wrong with, especially when it's so sideways, of taking the money off the table or moving the stop to break even. So prices come back. An interesting bar here that saw prices starting to move higher. It's the opposite of what we've got here, where prices have come off the highs and the volume is above the average there. So there was some selling in the high of this price bar. And if you go down into a minute chart, you would actually see this. So prices trade sideways and take out the stop before it see the market filled, which is fine, and then prices again move sideways and fill the order. Prices trading below the 20 bar moving average still and move lower. We're looking for prices to hit the BRN, they do, and once again you see prices starting to come back. And here you will see the market being bought back as well. So you're getting the clues in the software where the pros are buying back into the market. And then again, prices start to move back to the upside. And I'll just move forward here. This is at lunchtime when we've got the CPI figures. The consumer, not the consumer, yeah, CPI figures. Let me just go back, just double check that. Yeah, CPI. The inflation figures in old money. And these were released. And the reason I was looking at this is because obviously being a precious metals trader, I wanted to see the core CPI increase, as this would bring stability to the precious metals, because precious metals are a hedge, or used as a hedge against inflation. So that's what I was looking for. The figures were released, and you can see they came out a lot higher than forecast, that's for sure. And no surprise here as well, because the Fed needs inflation now. The amount of money that's been printed, there are two options here. We either reset the debt or we try and inflate our way out of it. And given the drop in global GDP, the supply chains being broken, you are going to see inflation coming into the market. It's interesting because for years, and I don't mean months, but years, the US inflation has been down at these levels. You can't make this crap up, honestly. Everybody knows from their visits to the supermarkets each week that these figures aren't accurate. But for some unknown reason, of late, Powell has said that he's happy to see inflation. So we'll see. Anyway, let's move on to the opening part. We didn't get a signal, but we see the selling there, and then the market came back. And then we got selling, and then we got some potential buying here in this bar. Just get the right tool there, just this bar here. And eventually prices become sideways. There's a fight between the bulls and bears there at the initial open, and then it became really quiet until prices broke out to the upside there, and you'll see the green bar. Unfortunately, we didn't get a signal, but we can see the increase in volume there. It's just because of how quiet it was, it didn't quite meet the criteria. And again, you'll see exactly the same thing here with the bar moving back to green, and eventually we break through. And I'm just going to wind this through, as you'll see prices moving higher here. And you're probably thinking, well, would there have been a way to have actually been able to trade this? Absolutely. If the market puts in a green bar, you can mark the trade up manually, which I haven't done on this occasion. But there's a way of doing that if you wish to do so, if you don't want to wait for the signals. The signals are more fine-tuned indications of what the market is likely to do, though. It isn't just based on the change of the colour of the MDI, but also takes into account the volume and where the market is trading as well. So the market just blasted higher. No surprise, because we'd spoken about this in the market alert yesterday morning, and also responding to the US as well, as they had the S&P moving back to the all-time highs there. So let's just fast forward through and get to the 4 o'clock close, where you'll see prices there still remaining on the highs. It was a really good trade as well, which is a shame that just owing to it being quiet in the first part of the session, we didn't get a signal, which really we would have had one. If this had been between 14 and 28, we would have had a signal right at the bottom of this move. But unfortunately, like I say, it didn't turn up because of the criteria. Now back to today, we can see that the market is moving back to the upside, which is what I've spoken about all week in the market alert, and this is why we've got these upside fibs and targets in the German DAX. And if we can take out this one here, 1374, so we're just getting above the 13,050 level, the minor psychological level, then we can move towards these other fibs, and also this high, which I will draw in for you so you know where we are and where we are likely to see some sort of potential weakness, which will be 13,318, which is quite a distance from where we're currently trading. But it's good to know where these levels are. Overnight, we've got the market. Let's just have a look where we kicked off. So the market sort of traded above the previous day's close, which you can see there, and the 200 MA, but then came through with some selling. and is now moved to the downside. Coming back to look at the 200 MA there, now back above it and sitting on it at the moment. But as ever, always do this when you start to trade. You've got to know where you are in the bigger picture. So I compress the data and have a look. So at the moment, we're just starting to trade below the 200 MA. We've got the DP down here. If this BRN is broken to the downside, this would be the first crucial area, and a break below this would take you down to the S1. Meanwhile, a close back above the 200 MA and the close will take you to this resistance level here, which ties into the BRN. It's the high of yesterday, and then we start to see the R1 on the upside there. So now when the market opens, I know exactly where I am, and that combined with the daily chart, I can also see where I am as well, and I'll take note of these figures as well, so that as the market moves higher, I know where it's likely to trade to, and I can use that to optimize the profits from the trade as well. And finally, we're seeing a bit of stability in the precious metals markets as well, and the dollar index down again yesterday. In fact, let me switch to the Omni software for this. So here we've got the daily chart of silver. We came down to the 20 bar moving average. Again, it doesn't matter what the time frame is, whether it's the 2-minute DAX or it's the longer term charts. It works exactly the same, makes no difference at all. So we can see now there is support in the silver market, and I will be looking to add into the positions that I've got. We're still red in the 4 hour, the 60 minutes now turned back to green, and that is sideways. The volatility's come out, the 30-minute there, 10-minute. I look in all of these time frames, especially when it comes to timing the trade. Again, I'll do something like this, even though it's a smaller time frame and a longer term trade. I will be looking to try and optimize an entry point by buying back at the 25. Here as an example, you've got $25 an ounce at the DP level. So if they had a final shakeout down to here, then I'd be looking for some sort of climatic buying, which occurred in the market yesterday. Before, if we just wind this back to the overnight. So as prices opened overnight into yesterday morning, again you can see this climatic action here, and here it just sticks out like a sore thumb, and that's where the shorts got back down at the S1. The shorts exited the market at 23.50, nice round number, and then brought the market back yesterday, which is what you see in the daily chart. So I will be adding to the existing positions that are here somewhere. There we go, in the silver market. So I'll be looking to keep buying on these sort of pullbacks. Okay, just before I finish, let's have a quick look at what news we've got today. It's the unemployment claims, the weekly one from the US, and this is forecast again another million out of work for the last week, and yeah, you can see there it's still consistent is the only word I can use. You can see there it's just these numbers are holding up, which is really quite awful to see, because each week over 1 million are having to apply for government assistance there. Okay, that's the only thing to move the markets today. Otherwise, they're going to make their own direction, no doubt, to the upside at some point, because that's the way it has been operating for the last 11 years. Okay, as ever, thanks for watching. See you in the